Hello Wolfpack. Now we're back here on Bitcoin. I'm still extremely sick with COVID here, so we're going to do our best to keep this video nice and short, although I don't know if that works out. Every time I say that, I tend to make videos of the same length, so we'll see what happens. But essentially, you know, what we're looking at on Bitcoin is yesterday was a scam pump as expected, right? We pumped back within the channel. We end up losing that channel once again, and that was all kind of as expected, as kind of suggested yesterday what was going to happen, right? I didn't think that pump was legitimate. I didn't think it was actually going to work out, and you know, lo and behold, it did not work out. We actually saw a bearish engulfing candle, which is a candle of bearish continuation. Now, with this said, and for a change here, I will say that I'm not 100% sure that the market looks completely and entirely ready to continue downwards. Why is that? Well, I mean, if we bring up the RSI, what we can see speaking here on the RSI is the fact that, well, we have a bullish divergence forming. We have, you know, higher lows on the RSI, and we have lower lows on the price action. So yeah, we do have a bullish divergence forming there on the daily chart, and we also do see a bullish divergence forming here on the 4-hourly chart, which has been forming since the 12th of April, and we have some sort of downtrending support line there as well. So, you know, again, I'm not entirely convinced at this point that we're going to be continuing downwards immediately, and you could actually draw this as a descending wedge, because we do have 3 tests of the downside and 2 tests of the top side. So at this point, as I said, I'm not entirely convinced that the market will continue downwards. At this point, I think the lowest it will be able to go in the next few days is probably 37k at this dotted support line. And then from that point, and just to note, that dotted support line on this chart is sitting at around this price point right here. So, you know, I think the lowest it can go is 37k, do something like this, and then probably bounce back up to around 40k. Or around 41k, which will be, or 40.5k, which will be the top of, the top, you know, this line here of the bear flag formation. Sorry, I'm very, you know, brain's a bit muffled from this COVID business, but this is what I think essentially is going to happen on Bitcoin, you know, according to the price action at this point, right? We're going to continue downwards to this line. We're going to bounce back up to this line here, and that will be the bullish divergence playing out. During that period, all the bulls will get hyped again, and then we're going to reject from that line and crash down, right? That's essentially what I'm expecting to happen. And I suppose a lot of people would say, well, why don't you think we'll just break back upwards? Because that's simply not what the chart's telling us at this point. I mean, even on the daily chart, if you wanted to bring up Ikomoku Cloud, bull market support band, 75 SMA, the Gaussian channel, the Bollinger bands, all of those center lines are sitting at the kind of the bottom of the channel formation. And so when we do inevitably come down here, if we see a swing upwards, we will be rejecting from that point, because all of those resistance zones will be in that area. That will be a support resistance flip, and then we can continue downwards to downside. Now, one of the reasons why I also don't think the market is entirely ready to go downwards to, say, 30k within the next couple of weeks is because of the fact that the 3-day chart is what I'm interested in here, has not seen that bearish cross between the depth cross, I should say, between the 50 and the 200 SMAs that has been so critical in the past. Now, as you can notice here in 2015, as soon as we saw that depth cross, we jumped down 50% in a matter of about a month and a half. The exact same thing happened in 2018. As soon as we saw that depth cross, we jumped down 50% in about a month and a half. And the exact same thing could be happening here. As soon as we see the depth cross, we will be jumping down about 50% in about a month and a half, or about 40%, depending on diminishing returns, all that stuff. You know, I don't think we're going to go down to below 20k. I think 24k will be the bottom of Bitcoin, as suggested by the 4-year cycle theory. Now, it's very important to note, for those of you who haven't watched my videos before, again, I think 24k is the most likely bottom on Bitcoin, as per the 4-year cycle theory. But looking at the weekly chart again, to kind of dig into this a bit further, you know, the Gaussian channel is also a pretty good indicator of when we start to see that massive correction that I'm expecting to happen sometime in May, and it possibly has already started here. When the Gaussian channel flips red, we generally start that massive move downwards, as per the depth cross we just referenced on the 3-day chart. Right, so at this point, you know, given the bullish divergences and stuff going on the daily chart and the 4-hourly chart, I'm not necessarily seeing the market as entirely ready to continue downwards with that drop. You know, I do personally think there will be support found at around 37k, and we will jump back up to around 40.5k or something like that before rejecting downwards. Now, I want to be very clear here. You know, these kind of short-term predictions really don't matter in the larger scheme of things. In the larger scheme of things, I think the market is going down. I think the market is bearish, and I think we will be going down towards the 200-week SMA before December. Okay, probably within November and December, but there is an argument to be made that it could happen in June to July as well, as per the massive crash that's probably oncoming in May. Okay, so, who cares about my short-term prediction? To be honest, it's just an observation, and it's just kind of like a little, observation I'm making that kind of assures you that, hey, if we do jump back up to 40.5k here, that's all to plan, and that's bearish, right? Now, when we start getting bullish again is when we start taking back things like 42k. You'll notice on the daily chart, I brought up all of those indicators before. If we break 42k or 42.5k, that will be breaking above all of those indicators, and then we can really start to move upwards. The bull market indicator that I'm looking at, right, so this is to continue a bull market, is going to be the 200-day SMA at 47k right now. But at this point, yeah, macro, I think it's definitely downwards. And short term, again, we could see a little bounce, anytime soon. The market doesn't look 100% prepped to go down, in my personal opinion. I think it needs to sit tight for potentially even a week or two more. Maybe even a little bit more than that, maybe about 2 weeks, before it starts that real kind of drop. But ultimately, who cares? Because the point is, the main prediction that I've been saying since 63k is it's gonna drop. So before we get into the rest of the video, let's take a look at the BitGet exchange. In a time when government regulation constantly threatens crypto investors, being able to access an exchange without KYC being mandatory is absolutely exceptional. This is great for me personally as an Australian because a lot of other exchanges out there like Binance don't allow me to access options due to Australian regulation. BitGet additionally is also host to trading fees even lower than the vast majority of the major exchanges at just 0.2% per trade. Sign up to BitGet using my referral link in the pinned comment below or the description box and you will receive up to 153 USD deposited into your account as a reward. Now, the other thing I'd like to talk about in this video is Ethereum, because I don't talk about Ethereum too often, but Ethereum generally had a kind of ascending channel formation the same way Bitcoin did. And, you could definitely call this a bear flag formation on Ethereum for sure. But essentially, it had also a dashed downtrending line on this formation that we broke above, kind of like a triangle, and flipped it for support on multiple occasions. We've actually dropped below that now. We've confirmed the drop below it, and so I think Ethereum is going to go downwards to the bottom of this channel formation to 2,500 within the next couple of weeks as well. Ultimately, my long-term prediction, bear market bottom prediction, on Ethereum is 1,300, which is signaled by prior support zones during the last bull market and also support zones built up during the lead up to the last bull market we saw in 2021. Yeah, so I think 1,300 is going to be the bottom region for Ethereum. However, what I would say is that Ethereum has significantly less data than Bitcoin, and so we can't be 100% precise about where the bottom will be. Now, moving onwards to the DXY. The DXY is breaking to the upside massively, which is extremely bearish for Bitcoin. What does this represent? It represents the fact that people are flocking into cash, and hence the US dollar is gaining power against other currencies and kind of assets, right? So essentially, when this thing goes up, it means the market is very risky. It means, there's a potential recession coming on. It means that people aren't comfortable in the market right now, and it's very bad for Bitcoin because Bitcoin obviously is a risk-on asset. When you can notice this thing's been skyrocketing, Bitcoin's been dumping. Okay, if you zoomed out, this thing's, DXY's been skyrocketing, Bitcoin's been dumping. That's happened over and over again since 2017. If you actually went on this chart and you drew out where the macro tops and bottoms were for Bitcoin, you could notice there is a strong reverse correlation between these two assets. Between Bitcoin and DXY, when this thing goes up, Bitcoin goes down, and this thing is skyrocketing. A lot of people have told me that it does have resistance upcoming. I would agree with that for sure. Right, we do have very strong resistance zone in the weekly chart at around 103. Now, if we close a weekly candle above 103, which by the way, I think we will do, there will be, continued corrections on Bitcoin for sure. And people would say that, people say over and over again, DXY is going to reject from 103. They said it about 100 as well. In fact, they also said it about 97. I don't think it's going to reject. Why is that? Because we're going into a recession. What do people do in recession? They sell all their risk-on assets for dollars. Okay, that's just what it is. And honestly, rightfully so, because there's nowhere you can hide when there's a recession. Housing prices go down. Bitcoin, as far as we know, will be going down. Stocks go down. There's nowhere you can hide other than gold, I suppose. But dollars is the most logical place to hide for the everyday person. And so that this thing will continue to go up, in my personal opinion. Now, we might see a small rejection, right? Might last a month or so, maybe 2 months. A bit of chop around here. But ultimately, I think it's going to break upwards when that recession strengthens. And there is evidence to believe that that recession will strengthen. And again, this is tying back to the DXY. If the recession strengthens, the DXY goes up further, Bitcoin goes down further. Okay, so this all ties into Bitcoin. And this is the evidence to suggest the recession will strengthen. Bond yields are absolutely skyrocketing. Essentially, it works in the way that when you buy a bond, the government's essentially allowing you to have a certain percentage of profit based on how much risk there is in financial markets or the general economy. Right, as of right now, it's gone up 18, 19x in a matter of a few months, which means that the government is kind of admitting, and the market itself is kind of predicting that the economic situation is getting very risky, and hence they need to give higher bond yields to people who are still buying government bonds. And what you can do, generally speaking, is you can make a prediction about where interest rates are going to go based off the bond yields. Okay, currently bond yields are at a point we haven't seen since around July 2019 or February 2018. All we need to do is see what the interest rates were in those points of time. Okay, so in July 2019, interest rates were at around 2.25%, and January 2018, interest rates were at around 1.15%. Sorry, 1.5%. Interest rates are currently at 0.5%, which means that interest rates need to hike up significantly more in the immediate short term in order to continue following the rest of the general market in a sense, right? So generally, what this kind of means is that bond yields are predicting a massive interest rate hike and continued interest rate hikes over the next few months, and there will be 50 basis point hikes for sure, because it's essentially telling you that bond yields are predicting significant hikes, and we haven't seen those hikes yet. And so in a way, interest rates are kind of undervalued right now, if you wanted to put it in kind of financial market terms, and we can expect them to rise further, which means the recession is going to get worse, which means more people are going to flock into cash, and which means the DXY is going to go up, which means Bitcoin's going to go down. Okay, kind of complicated for people who don't understand it fully. However, it makes perfect sense to people who do. The macro situation is very bearish, and so tying it back into the start of my video, although the TA at the moment suggests we maybe go down a little bit further before bouncing, it is pretty clear to me that you will be rejecting on that bounce if it does happen. And it is pretty clear to me at this point that the TA kind of takes a little bit of a backseat when the macro situation is this bad. I still think we're going to have that crash in May. I think it maybe has already begun. And I still think that, in May, or potentially in early June, we will be seeing 30k. That's something that I've been saying since January, and I still think it's going to play out like that. So again, May or early June, 30k Bitcoin. There's nothing at this point that suggests that won't be the case. Thanks for watching, guys. Hope you enjoyed. Sorry you have to deal with my croaky voice, and I'll catch you in the next one. Cheers.